The desire to reach a level where you're making money on a consistent basis can be a frustrating and often disheartening business. There's a certain stage in a trader's career where they know a fair bit about trading, and yet somehow they just can't seem to make money overall. Some will jump from one method to another in search of a fix to the problem. But there's a good chance that the trader will come across the same problem over and over again because it's not the system that doesn't work, but it's the trader. So to those who are at this difficult stage, ask yourself how truly committed to becoming an effective trader you've been so far. Now, if the answer is anything other than totally, ask yourself if you are willing to knuckle down in order to really escalate your trading. Once you've committed, you will naturally start to zoom out from focusing solely on your strategy, and you'll realize that if you're going to do this properly, there's no room for leaving things to chance. Successful corporations have structures and procedures for virtually everything they do, and for good reason. They want to know what the most efficient way of doing things are, how to eliminate costly errors, how to maximize profit, so the employees will act in a certain way when they come across something new. Any of these can have a dramatic impact on profitability and the continuing success of the company. So what steps can you take in order to make sure you trade as you would expect a business to operate? Start off by doing the things which are in your power to control. Now, there are only so many things in trading that you can control. It makes sense to not leave to chance everything that you can control, and to do so is the first step to becoming a trader. Define your trading plan clearly and thoroughly. If you know exactly how, where, and when you're going to trade, then you can start to make progress. You will be able to see how well your strategy is performing, how well you are executing it, when you're taking trades outside of your plan, and whether your approach to risk is beneficial. Yes, you may eliminate opportunities which you may have taken in the past, but by making your approach consistent, you have a point of reference from which you can move forward. Now, if you don't prepare properly, you're really leaving yourself open to making amateur errors. If you take a loss because you didn't realize Bernanke was due to speak, there's really no excuse. If you took a loss because you rushed through your prep for the day, you must take steps to ensure that you have plenty of time to get ready in the future. Being ready for each and every trading day before you start to trade is the absolute bare minimum that you must do in order to trade. Preparing in a consistent manner not only ensures you don't miss anything, but it also allows you to see what's useful and what's not. It also makes the work easier as it becomes more and more natural over time, and ultimately it just becomes kind of a ritual. You can journal your interaction with the market, and I think the reason why most people don't journal is for one of two reasons. They might actually know which things are doing wrong already and therefore not see the point. In this case, I'd ask whether you know to what extent specific problems are affecting your trading and what their root causes are. So if you know there's a problem but are unable to change for some reason, there's a good chance that you don't. And by writing it down, you are constantly forcing yourself to be aware of it, which can force a change in itself. The other reason is not knowing what to write or track in a journal. And believe me, it'll become quite clear soon enough if this is you. You can make notes on your trade plan, your emotional state of mind, track your performance in certain market conditions, or other market behavior, for example. Just make sure you keep things orderly and easy to track. And as part of your journal, you could also track your trading errors. Now, many traders don't realize to what extent their errors are costing them in their pursuit of trading success. Simply put, a trading error is not following your trade plan, getting a worse entry than you should, accidentally buying instead of selling, panicking out of a winning trade, taking a trade where one really didn't exist, not taking a trade when you should have. These are all examples of trading errors, and once you see the extent of any problem, you'll be much more likely to make a concerted effort to avoid it in the future. Now, most trading platforms will have some sort of record of trades, and you can use that as a starting point. Often traders tend to look at performance on a broad basis, but delving deeper can be really beneficial. Now, if you're only looking at the P&L, you might miss that your strategy seems to take in an inordinate amount of heat, the MAE, the maximum adverse excursion, or you might do particularly poorly on a Wednesday morning. You might see a big down day followed by a number of other smaller losing days. And if you have a decent journal, it's possible to then go back and identify the reason for this. Following on from performance tracking, it's important to look for ways to improve on your plan. Now, don't get me wrong, I'm of the view that there's a thing as too much tinkering. But if it's obvious that you keep getting stopped out because your stop is way too small or your entries may be one swing too early, then come up with an alternative method. Once you have a plan, back-test it to see if there's any merit in the alteration. The fact is, even if you have a really good strategy now, markets change over time. Implementing everything we just talked about overnight may seem a little daunting at first, but even changing one small part of your approach to trading can have a big impact over time. By tracking your errors, for example, you might see that you take a lot of impulsive trades and come up with an effective way to avoid them. And by seeing the improvements you've made, you'll probably be spurred on to put the same effort into other areas. So if you're struggling and you can't figure out why, ask yourself whether you're doing all you can do to make a success of trading.